Stablecoins are now a top 20 holder of US national debt. Countries will hold US debt as like an asset, but now stablecoins. Overall, with all the stablecoins combined, they're a huge holder of US debt.
Seeing prices hit into the September monthly high of 66,500 and seeing it so far be bought up is a good sign. A big part of that, the ETF flows from Bitcoin in the US, it's a big piece of the puzzle at the moment, I think, in terms of just driving even market sentiment, if not anything else. Hey guys, welcome to this week's episode of the Tapping Into Crypto podcast. I'm Pav, and with me is Sir Giggles, also known as Ted. Yeah, seemingly can't get over the fact that we've fumbled the setup without our director and producer Dan.
Yeah, Daniel's gone to Japan.
He's left the boys in tatters.
And we have no idea what we're doing. We just started a podcast without a light on and without the cameras recording. So yeah, we're going to refuse any future trips for Daniel.
Yeah, you'll have to stay right here, mate. Sorry.
So please bear with us if there's any audio or technical issues, but hopefully we've got it right.
I think it's sweet. I think it'll be fine. We're not going to stress about it.
But look, Pav, we've got a big episode today. You're going to give your thoughts on the market, which we all love to hear. Then we're going to dive into an A16Z Crypto Report, which has some really juicy insights. And there's also some massive news coming out from Uniswap. So we're going to unpack it all, but let's get started with you.
Yeah, let's go. So this might be a bit of an information overload, but I really recommend those listening along at home, just come check us out on YouTube. You can come follow along on the screens, might make it a little bit easier to read along with. But obviously last week we were, delighted to see that crypto's been on a bit of a tear lately, 1 to 2 weeks of up so far. We finished up last week and continued to rally into yesterday being Monday, getting close to 70K, and now we're experiencing a bit of a breather, a bit of a pause, a bit of a reset, and the biggest part of the equation now is heading into the middle of the week, end of the week, in my opinion. If we want to see another green week, we should see the trend continue in the middle of that week, being Wednesday, Thursday. So upon the release of this podcast, obviously we're going to have some clarity into what's happening next. But for me, seeing prices hit into the September monthly high of 66,500 and seeing it so far be bought up is a good sign. And a big part of that, we'll cover off in a sec as you're all across the TED, but the ETF flows from Bitcoin in the US, it's a big piece of the puzzle at the moment, I think, in terms of just driving even market sentiment, if not anything else. But big week ahead, I think, especially heading into that sort of Q4 period. We're starting it, we're about to get into the thick of it. And we can even look at some other key metrics, such as, what are the speculative markets pricing in as expectations? So we've done this in the past on the podcast, but we've looked into things like option books. So options being derivatives, you could classify it as more sophisticated or smart money, putting calculated bets on where they think the money will be. But the difference with options contracts is that they're time horizon driven. So there's an expiry date. So price hits by a certain time. Otherwise, the contracts are useless. So if we look at the largest contract by notional value, so that's current amount of, you could say, positions on at the moment. We've got the 25th of October as the next expiry date. So not too long from now. We can see there's a massive peak of expectations of a 70K price to be reached, or at least get close to. So the idea is, like with options, is if you're right in terms of direction of the market, the closer you get to the strike price, the more of a premium you'll yield, or be able to execute your option to collect that Bitcoin. But then moving forward, even we can use a tool like this to even look at future dates, like the 29th of November. And we can see that the peaks are generally increasing in price as the time stretches out, which is obviously good if we're expecting the market to appreciate. So again, the broader market here, speaking on these option books, they're expecting 80K in November. That's the 29th of November. And then we can go again to the 27th of December. And the largest peak we have there is 100,000 US per Bitcoin by the 27th of December. So it's not predictive to say this will happen, but it's more to say the speculative arm in the market, one of them being option players, the people that are long, these are the levels that they're looking at, and they're the kind of time horizons that they're expecting it to hit. It is something that evolves. So obviously, as we get into November, as we get into December, these peaks can and will likely change. So right now, standing from where we are, current market conditions, these are the expectations. So I'll be tracking this pretty closely. But there's also this little guy down here called put call ratio, which very simply means, how many people are bullish to bearish. And anytime this is below 0.5, basically means there's more bulls than bears. So that's all you need to take away from that one, very simply put. So, add a bit of volatility to come back into the market, which we're all expecting, just as volatility has been at historic lows. It's not hard to understand that if we're going to reach these price levels, it could happen a lot quicker than what people are thinking. And I think that's the key thing that I'm sort of paying attention to right now as well.
Okay, good. And I saw the fear and greed index was sitting at around 70 or something, which is considered like quite a high level in terms of greed. So just keep an eye out for that, because typically when that gets up, it means like markets are doing really well and people are getting quite greedy when it comes to altcoin markets. And then often people will pay a bit of a price when they get in it, when those levels are very high. So keep an eye out for that. But I wanted to touch on the ETF inflows for this week. I mean, last week we had a huge week. I think we had around net inflows of $2.1 billion for the 5 weekdays of last week, which is massive. And hopefully, I think we were checking before, like the data just came in for yesterday, so Monday's data in the US, and it was another 330 odd million in inflows from BlackRock alone. Yeah,
it looks like some of the other players, but not so much on the accelerator compared to last week. Some even seeing outflows, but when you look at the major player in the space, we've got the latest update there that it's 332 million straight away. So first day of the week. So that's a pretty big sentiment check for me.
Yeah, massive. Yeah. And if you just go back to that article, it has quite a good chart that I want to break down. So this chart from Bitwise shows gold versus Bitcoin inflows in their first year of trading and so on. So obviously gold ETFs have been around for a lot longer than Bitcoin. We've only have 1 year of data when it comes to Bitcoin ETFs, but gold, we have up to 9 years, and it shows like quite a small. It was quite small demand in its first year of trading, but then it's been trending upwards since then. Whereas with Bitcoin, we saw over $20 billion in net inflows in its first year, and that's like more than gold has ever had in its
whole first year.
Yeah. So whether we see a similar sort of trajectory with Bitcoin where it continues to go up, but clearly it's had this huge start. Like it's going to be hard to maintain that over time. But
absolutely,
given the appetite for gold increased over time, like I can't understand why the same wouldn't be for Bitcoin, particularly as governments around the world and more people start to adopt it and see greater utility in it.
Yeah. And I think just to your point too, there was another one, we haven't got it up yet, but options, again, just because we talk about options, they got approved as well on these instruments on the Bitcoin ETF. So another way for the larger players to sort of risk manage their positions too. So that could add to the demand arc as well. So it all seems to be going in the right direction, which is not bad. Don't mind seeing it.
Oh man, we love to see it.
Yeah,
we love to see it.
But let's talk top movers. So obviously, we've talked about Bitcoin and how it's been pretty much stealing the show, but there's been some single-handed outperformers in the market. So we see a general sea of still a bit of red, not many massive losses, but just no major gains, except for a handful. So we've got ApeCoin there, which we'll dive into in a second. We've got Dogecoin, DYDX, Beam, Pendle, Jupiter, Solana probably being the main standout from the top 10 in terms of movement. So again, a theme that looks like we're going to keep seeing. We've been seeing it for over a year now. Still just absolutely showing lots of life, lots of strength. But let's just dive into ApeCoin. So some pretty key news around this one, right?
Yeah, so it's up over 100% the last 7 days, which is massive. But you also got to consider that it's still down something like 96% from its all-time highs. So it was launched in the last bull market. And for anyone that doesn't know, the ApeCoin is the cryptocurrency of the Yuga Labs ecosystem, which is like the Bored Ape Yacht Club NFTs that obviously went crazy last cycle, and then hasn't really done much since. But they've just launched their own blockchain, so it's called ApeChain, and it's built on Arbitrum 1. And it's just going to increase the utility of ApeCoin within the Yuga Labs ecosystem. So a lot of hype around that launch. I know like the ApeCoin ecosystem was a little bit of a metaverse play there, but I haven't really heard anything of it since. So maybe this will add some sort of some more eyeballs to the whole ecosystem.
Yeah, it definitely went quiet after having such ambitious ideas. I think it was like the land sale that they had, which would create like a $5,000 gas fee as well, or something crazy like that.
Yeah, so people were just buying the land within the game itself, just speculating that, as an NFT, it'll go up in value.
Yep.
But
might still.
I mean, but not still it was 93% down from its all-time high. Like after 100% gain in a week and still seeing that's crypto, isn't it?
Yeah. And speaking of that's just crypto too, like I sort of did a bit of a deep dive into what the actual market's doing during this period of time as well. So obviously on this chart here, the yellow line is the price of ApeCoin. And then looking at some of the metrics on how we can measure its activity on derivatives exchanges. So people betting on leverage or margin, what's going to happen with this coin, up or down. Massive negative weighted funding rate during this pump. So basically suggesting that there was a lot of people shorting as price was rising, expecting some sort of pullback.
Yep.
And then as a result, lots and lots of liquidations on the short side as well. So looks like about 13 mil cumulatively during that period of time. Like not a huge amount when we look at how much Bitcoin creates in terms of liquidations at that point in time. But just from a market sentiment point of view, it does seem like there's still a fair bit of pessimism with any altcoins moving to the upside like this. The market's expecting that it should turn around. Which in this case, it just kept cutting through and it took a few people out along the way. So
I guess the fundamentals sort of outweighed the negatives in that one.
Yeah.
But you touched on DYDX as well, which is a perpetual decentralized exchange.
Yep.
And they have their own chain as well, but it's a little bit different to say like a general purpose layer 1 or layer 2, whereas it's like built specifically for the exchange. But DYDX, we haven't spoken about that too much recently. I know last year there was a lot of people using it to trade futures and whatnot. But look, there's not too much to take out of this one. They did have like their own sort of conference yesterday in Dubai. No major announcements came from that one from what I saw. But they did appoint a new CEO as well. So potentially some people bullish on that aspect.
Yep, just like on the roadmap potentially, who knows. But good to see still. Like they've been around for quite some time doing good things. But other than that, really, there's nothing else to take away from this other than, obviously Dogecoin moving. I think there was Elon mentioned it at the recent Pennsylvania speech that he did.
Yeah, right. I did see that.
Yeah. So name dropped that was his favorite social coin, but then also there was something else along the lines of, I should have brought it up, but just a little bit of potential news there.
There's still an ongoing class action lawsuit against Elon from a bunch of Dogecoin investors that's saying he was like pumping it for his own benefit.
Probably true. Maybe.
Yeah.
Maybe. Interesting.
Maybe they missed the pump.
Maybe. There's still that satellite waiting to be launched, right?
Doge 1. Yeah, they delayed it, and then I haven't heard anything of it since.
No, neither.
But you see, they caught the rocket.
Yeah, that was huge.
Crazy.
Yeah. Imagine if...
Insane. The man's doing big things.
Man's doing huge things. But otherwise, let's move on to some top news stories from the week.
Yeah, so I mentioned earlier in the show that Uniswap has some major news. And this is pretty significant. So they've actually launched their own general purpose layer 2. So as I mentioned before, DYDX has their own chain, but it's specifically built for the DYDX exchange, whereas Uniswap in this case are launching their own general purpose layer 2. So it's going to work similarly to how, you'd see Arbitrum or Optimism or even the layer 1s. It's gonna operate in a similar way. It's just built on top of the Ethereum blockchain.
Okay.
And it's called Unichain. So I guess why is this significant? It's significant for a few reasons. One, because I guess they've seen that, building or having the exchange directly or having the Uniswap exchange directly on Ethereum isn't working as well as it should be right now, simply because Ethereum's struggling with scalability issues. People want to trade quickly with low fees, so they've taken things into their own hands and basically launched their own layer 2, which is interesting because we've seen a lot of projects move from Ethereum to the likes of Solana and other chains because they have better scalability, they're faster, they're cheaper, whereas I guess Uniswap have doubled down in their support of Ethereum in one aspect because they're continuing to build on the Ethereum network. So I guess a few things to take away here. It's a big win for the Uni token because Unichain's launch will see Uni gain increased utility as it will be used to stake in the new network design. And then a bit of a win for Optimism and its OP token as well because they will be using Optimism's tech stack for its infrastructure for the launch. So they'll be joining other big names like we've talked about. Coinbase's Layer 2 base. Also, Sony is launching their own blockchain. And then WorldCoin and Synthetics are also using Optimism's tech stack. So seems to be a lot of love for Optimism at the moment, especially their infrastructure, over the likes of, say, Arbitrum or even Polygon. But yeah, this is coming combined with their upcoming launches of like Uniswap v4. We're currently in Uniswap version 3. They're building a new mobile wallet, so it'll be used through the app there, and then Uniswap X. But still, as we talk about this, Uniswap's down 86% from their all-time high. So
it'd be interesting to see what happens in the next coming months. Obviously, like we just spoke about top movers again, like Solana was there. Ethereum's still quiet in the trenches. Like, are we going to see people have a reason to migrate across back to Ethereum? Like, I'm not sold just yet. I need to see it because any chart that you look at, Solana versus ETH, it's Solana trumping at the moment. And
like the whole thing about layer 2s is you're building on top of Ethereum's to utilize its network and security. And then you basically you're going to leverage your own layer 2 to be more scalable, to be faster. But having used the layer 2s, like bridging across, like the usability is not great, and especially if there's multiple layer 2s that you're using. For instance, like Optimism base and even like Unichain, and then you're also sending from the ETH network. It's actually a bit of a pain rather than just like you're on the Solana network. Everything's fast, everything's quick, everything's cheap. You don't have to bridge across different chains. I think there's a little way to go in terms of improving the UI in terms of layer 2s,
especially with like every subsequent market cycle we're seeing. It's the next round of adoption. Like you're probably going to maybe double the amount of people using DeFi in the next 24 months. Let's just or 12 months, 24 months, right? So. Do you think people really want to jump through two hoops?
Exactly.
I don't know. It just seems like a fundamental flaw.
Like even natives such as yourself and I, it's a pain. It's something that we don't want to have to go through, even though we potentially understand it and how to do it a little bit more. It's just painful for everyone involved.
Yeah, and at the end of the day, like I'm just a speculator. Like I have no tie or love for one chain over another. But I mean, at the end of the day, if there's a momentum behind one chain and not another, like you even look at something like Sui or Say as like an upcomer. Like if they're showing higher rates of adoption and growth, and Uniswap's just struggling to keep their regular active user counts up. Like it seems like an uphill battle.
But in saying that, Uniswap is still killing it when it comes to like DEX transaction volumes. They're still the biggest DEX out of all of them. Like even Jupiter and some of the likes on the Solana blockchain have been gaining momentum, but Uniswap is still dominating that area. So I mean, they are making the right moves. Like, I don't know. I guess this remains to be seen, but they've also got their own mobile app. They're launching the version 4 of their exchange. So they're making big moves. They're not just, sitting and waiting for something to happen.
Yeah, that's a good sign. Yeah, look at that. It's a fair bit ahead at the moment. Yeah, Radium's about 50% of what Uniswap's doing at the moment in the last 24 hours. Pretty close when it comes to 7-day. Look, I'll cover this one last story and then we'll jump into the crypto report that we mentioned at the top of the show. But one last one from an adoption perspective. Stripe, so large payment platform, for those not aware, acquiring a stablecoin platform, Bridge, in a $1.1 billion deal. So Bridge was founded by some Coinbase execs back in 2022, backed also by Sequoia and Rabbit Capital with about $58 million in funding. So now they find themselves at a very heavy sort of acquisition deal here today. But for me, like the key takeaway here is that obviously Stripe, largest, if not second largest payments rails network in the world, looking at stablecoins as the future or a likely future way of dealing in business in their transactional business. So, really looking to challenge those traditional payment network rails like Swift. The Swift network, as we know it right now, is number one. So, would these optimizations in stablecoin as a form of settlement get them over the line as being the next big wig? Like, I think that's obviously their idea as a part of this deal. But it's huge. So be keen to see what happens here in this space, because Stripe is integrated with everything that we would probably see and touch when we go shopping online. Like we just don't know it. So having all of a sudden the ability to maybe settle in crypto or even if it's not that, it's something behind the scenes that improves like the efficiency of these networks or these payment providers, like may mean less fees for customers.
I mean, it's been a major trend this year. We've seen PayPal launch their own stablecoin. Now Stripe's getting into the space as well. Ripple, despite having XRP, they're launching their own stablecoin.
Yep.
So, I mean, this actually leads well into the report that from A16Z, because they talk about stablecoins being like the best product market fit in crypto. So let's dive straight into this. So this is their annual report. So they've actually broken down like 7 key takeaways from the whole report. So we're going to dive into them and spend a little bit of time on each one. So the first one is crypto activity and usage is at an all-time high. So that's awesome to see. That doesn't necessarily mean like prices at an all-time high, as we know, but it means like, active wallet addresses, people using DeFi, people using decentralized exchanges, things like that. Just overall blockchain usage and crypto activity is an all-time high. So really positive to see. Doesn't come as too much of a surprise. Obviously, more people are not just buying crypto these days, but also starting to interact with some of the the use cases that it has on offer. Crypto has become a key political issue ahead of the US election. That's something we already know. We don't really need to dive into that. But this one that we were touching on before. So stablecoins have found a product market fit. So basically they're saying that stablecoins have now become one of crypto's most obvious killer applications. And comes to no surprise, because we've seen banks start to adopt stablecoins because cross-border transactions have been a bit of a problem in the past, because you're doing foreign exchange, fees can get very high, it's very slow, it's going from bank to bank, or person to person with a bank in the middle. So in that situation, it can be very clunky.
Well, that's a pretty clear chart there for those listening along at home. It's like the cost to send USD internationally on average costs $44 for a transaction, and less than $1 if using some of these layer 2 scaling solutions.
It's saying less than a cent via USDC on the base L2 network. About $1 if you're using USDC on the Ethereum network, which we know can be more expensive.
Vary.
I think it's a massive use case for it. Cross-border transactions, even people in some less fortunate countries that might have inflation or something are adopting stable coins, because they're pegged to the US dollar. They're not as volatile as the other cryptocurrencies. They're safe. You can transact them overseas super quickly. You can even purchase things, because more vendors are starting to accept crypto and stable coins. So overall, I think stable coins have really sort of led the charge in terms of utility.
Look at that volume. It's technically at all-time highs in terms of transfer volumes.
And this, what is a really interesting one, because obviously stable coins are backed by,
treasury bonds and stuff.
US dollars or US dollar equivalents like treasury bonds and government bonds and things like that. And they have a stat here that stable coins are now a top 20 holder of US national debt. So often countries will hold US debt as like an asset, but now stable coins, because they have to basically hold assets one-to-one, i.e. one USDC or USDT equals $1 or dollar equivalent in their reserves. So now they're, overall, with all the stablecoins combined, they're a huge holder of US debt. And then $8.5 trillion have occurred in stablecoin transactions in the second quarter of Q4. So that was from April to June. So 3 months, and that was across 1 billion transactions and $8.5 billion in transaction volume. So absolutely massive volumes happening through stablecoins.
Wow.
Moving on, diving into the next key takeaway. So infrastructure improvements have increased capacity and drastically reduced transaction costs. And I think that's something that we've kind of focused in on this year, particularly with the podcast, Pav, because we've seen all the flashy stuff is nice when these projects are coming out with big announcements or big marketing campaigns, but it's really the infrastructure and the development activity that drive that sort of ecosystem adoption and allow it to thrive, because we saw in the last bull market where there was so much demand and usage happening across these chains, but the infrastructure just wasn't there to support that. But now we're seeing the continued development across these networks has been so massive that now I think we're at 50 times the capacity that we were at last cycle to facilitate transactions, which means faster transactions, cheaper, all those things that needed to be prioritized.
It's good to see.
And then on that, so DeFi and DePIN are leading the space when it comes to infrastructure development in 2024 as well. So DeFi, obviously, the likes of transacting on a Uniswap exchange, or even using a lending borrowing protocol like Aave. And then DePIN's sort of an emerging sector we've talked about a little bit this year, where they use physical infrastructure, i.e. a network tower or something, to bring things online and to be more decentralized, scalable, and secure. So they talk a lot about knowledge proofs. It's usually abbreviated to ZK technology, and they say that could be the end game for the blockchain trilemma. So for anyone that doesn't know, the blockchain trilemma is this issue where blockchains can prioritize only 2 out of the 3 of scalability, security, and
cost, isn't it? No, capacity?
Interoperability. And so often networks will have to prioritize 2 and kind of let one of those go to the wayside. In the case of Ethereum, they've let scalability sort of lag and sort of focus more on the security and interoperability side of things. But this report seems to predict that ZK technology will be endgame by combining all those 3 and being able to deliver on all those 3 fronts. So interesting point there. So takeaway 5, DeFi remains popular and it's growing. We talked about that before. No surprises there. Crypto could solve AI's most pressing challenges. The report dives into how there's a massive intersection between AI and crypto, and it's got some interesting things here. Like there's this chart, narrative mindshare from crypto-related social media. So in terms of crypto sectors, the likes of meme coins, DeFi, L2s, AI is getting them by far the most talked about on social media.
Okay.
From a crypto perspective, and then if you go up a little bit more, they also have this. So there's an intersection between people using ChatGPT, which is obviously the AI chatbot that we've all likely used before, and crypto websites. So the data comes from SimilarWeb, and people are using both crypto websites and ChatGPT to show that there is definitely an alignment between the two. Key takeaway 4, just to jump back a little bit, about the infrastructure development improvements. And so that's sort of the breakdown. We'll obviously link the report in the show notes, so you can go check it out in your own time, because they've got some really good looking charts which kind of break down a little bit more what we're talking about, give it a little bit more of a visual aspect to it. But anything to add there, Pav?
No, it's a good snapshot. Like, I do need to sit down with this. I kind of kicking myself. I didn't have a look last night when I did see it, knowing there was a podcast to record today. But I think you covered it and did it justice anyway, mate. But
that's okay, mate. I'm just doing my regular prep as I like to do,
unlike me. But yeah, I think the stablecoin fit for market. That just hits home for me. Like everyone's saying that there's not a legit use case. Like I think that's the one that's just so obvious, but no one wants to admit it, because you can't really invest in a stablecoin and see it go higher. It's more just the network adoption and seeing more people come onto the space and seeing more liquidity come in. And when money comes into DeFi land, it usually creates opportunity in other ways. So
that's it.
That's kind of what I like.
Obviously with stablecoins, you can easily swap them for other cryptos, which means adoption of crypto is likely going to increase, and then liquidity often these stablecoin chains and networks will utilize other networks like Ethereum, Solana, whatever it may be. So that increases the overall adoption of those, which is reflects good on their fundamentals. Yeah,
it's also just refreshing to see this after being in my own echo chamber, where I've just been looking at meme coins for the last 2 months. So I'm just waiting for other things to actually start doing things. But it's it's a great report.
Yeah,
we've looked at this, I think, last year and the year before too. So there's always something to take away from it as a bit of a nugget.
It's our annual report breakdown of A16Z. What can you break down that name for us?
A16Z. It's like Andreessen Horowitz or something. Yeah. And I worked it out that it's A for Andreessen, like the first name, and then Z, last name is Horowitz, and then there's 16 characters in between. So A16Z.
We figured that out just before we started recording.
Yeah, so pretty big deal.
That's the insight you don't get anywhere else.
Oh god,
lovely.
That's why we were having camera meltdowns.
I think it's time to dive into the tipping, which I don't know if we need to this week. We probably.
Come on, mate.
Okay, so bit of a long episode, so we might cover off on this pretty quickly. But Pav, you got the W this week.
Yeah, got the W again. It's good to be back on top. So I had tier, say, and whiff, and ended up just a little bit above square. Honestly, $10,050. Obviously, Bitcoin stealing the show this week. And then this coming week, I'm still going to keep with alt, still going to stay risk on. So I've gone for Arweave, I've gone for Mantra DAO, OM, and Jupiter, JUP. So the idea there being that AI, just want to have some sort of exposure to that. So Arweave being that one, which is also deep in. Mantra DAO, the real world assets one, but it's been trending quite well against Bitcoin, and the chart looks, just in my opinion, quite nice. And looks like price discovery is not too far away. And then Jupiter, just a beta play on top of Solana running. I feel like there'll be some things in the Solana ecosystem that could feel the benefits or the tailwinds. So it was between that and some other ones. I just chose, the more higher market cap option, essentially. So yeah, that was my three.
Love that, mate. You say Bitcoin dominated this week, yet I had Bitcoin and I still lost. So I finished the week on 9,742, so slightly down from the 10K we put in. I also had Aave and Say, which didn't do much either. So this week I'm looking to go into Ondo, I think we could see a little bit of a rotation into RWAs, being a bit quiet as of late. Uni, just like the story there with Uni Chain, we haven't seen much price action at all with Uni this year, so I'm just hoping it's more of a hope play that
that's good.
Because they're doing well on a fundamental front, that is reflected well in their price. But I'm not actually super confident with that one.
All right, well, it's good to see that you picked
and then and then also want to get some exposure to AI as well, so I've gone Render.
Yeah, nice.
Cool.
Very good. Thanks, guys. Thanks for bearing with us. A bit of a long one, but again, in the show notes, go check out that A16Z report. It's always an insightful piece. And we'll be back next week to break down what matters.
Absolutely. Thank you, guys.
Cheers.
See you later.